Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JIANGXI Copper interim report. JIANGXI Copper Company Limited offers a diverse range of businesses and services, including mining and smelting of copper and gold polymetal minerals development, copper, gold, silver, rare earth, lead and zinc, trade and financial, logistics, and technical support services extraction and processing of precious metals and scattered metals smelting, rolling processing, and deep processing of non-ferrous metals and byproducts research, development, production, and sales of copper materials manufacture, and sales of wires and cables, trade of related products. These businesses are divided into two main segments: copper-related industries and gold-related industries. The stock price of JIANGXI Copper has skyrocketed by over 90.71% in the past year due to a combination of factors. The growing demand for copper driven by emerging technologies such as artificial intelligence and electric vehicles is a significant contributor. Additionally, expectations of U.S. interest rate cuts and a weaker U.S. dollar have boosted industrial metal prices, including copper. Analysts also predict a supply shortage in 2026, which will further drive up demand and prices. JIANGXI Copper's strong company earnings and strategic investments have also supported its stock price growth. The company's profit attributable to shareholders increased by 19.78% year-on-year in the first half of 2025, despite a slight decrease in revenue. Furthermore, major mergers in the mining sector, China's pro-growth policies, and JIANGXI Copper's increased stake in SolGold plc have all positively impacted its stock price. Overall, the confluence of these factors has driven the significant increase in JIANGXI Copper's stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the completion of key projects, establishment of new product sales channels, and commencement of operations at expanded capacity projects. Notably, copper-related businesses have been a significant contributor to revenue growth, with a $214.4 million increase in revenue from June 2023 to June 2024, and an expected $40.8 billion revenue growth from June 2024 to June 2025. On the other hand, revenue decline is primarily attributed to decreases in gold production, copper contained in self-produced copper concentrates, tellurium production, and sales of certain products such as copper cathodes, copper rods, and gold. Mainland China revenue has also decreased by 11%. The net income of the company underwent significant fluctuations between 2018 and 2020. Initially, it decreased by a substantial amount of -174,862,498 yuan in 2019, page 15. This trend continued with another decrease mentioned on page 23, although no specific amount was provided. The situation worsened in 2020, where the net income plummeted from $0 to a net loss of $5 million, page 43. However, there was a slight improvement in 2021, as indicated by an increase of 1,006,150 RMB, page 72. Profit margins also experienced changes during this period. On page 23, it was noted that profit margins decreased due to difficulties in raising processing fees and volatility in copper prices. The negative net income in 2020 implied a negative profit margin, page 43. Conversely, the improvement in net income in 2021 was attributed to the formation of net deposit and financial assistance from JCC to JCC Finance, leading to an improved profit margin, page 72. The company is indeed generating positive operating cash flow. This is confirmed by multiple pages of the financial summary, including page 11, which states that net cash flows from operating activities are a significant positive amount of RMB 2,871,405,799. Additionally, page 30 and page 106 also support this conclusion, indicating that the company's operations are generating sufficient cash to cover its expenses and investments. The company's debt level and interest expenses have undergone significant changes. The total debt level has increased by 66.7% from RMB 61,692,087 to RMB 102,785,891, primarily driven by a 91.2% increase in short-term borrowings and a 127.89% surge in non-current liabilities due within 1 year. However, long-term borrowings decreased by 50.15%. Interest expenses may have changed due to an increase in derivative financial liabilities of plus 76.39%, but accrued interest on restricted bank deposits and interest payable have actually decreased. The company's financial performance reveals a mixed picture across its segments and regions. On the positive side, the copper-related business stood out as a strong performer, generating $216.43 billion in revenue and $5.36 billion in profit before tax. This segment also reported significant growth in China, with RMB 131 billion in revenue and RMB 4.8 billion in results. In contrast, the gold-related business struggled, posting lower revenues of $42.92 billion and a modest profit of $355.73 million. The segment's performance in China was particularly underwhelming, with RMB 40.9 billion in revenue and RMB 191 million in results. These disparities highlight areas where the company needs to focus its efforts to improve overall performance. The company has a history of rewarding its shareholders through both dividends and share buybacks. Notably, it has paid dividends in 4 instances, in 2023, twice in 2024, and an interim dividend for the first half of 2025. Additionally, the company has bought back shares in 2024, demonstrating its commitment to returning value to its investors. Concerns about inventory buildup and supply chain disruption exist. There are valid concerns regarding inventory buildup and supply chain disruption. The financial summary highlights these risks on multiple occasions. Specifically, it is noted that maintaining reasonable inventory levels is crucial to reducing capital occupation, page 45. Furthermore, tighter supplies in regions outside the U.S. and production disruptions at major mines indicate potential supply chain issues, page 21. Additionally, a decrease in sales volume of trading business may suggest problems with inventory management or supply chain efficiency, page 31. These points collectively underscore the need for careful management to mitigate these risks. That concludes the financial summary for JIANGXI Copper. Feel free to comment below, and I will be happy to answer them when possible.